Oil prices have been supported in recent months by expectations of an economic recovery as the world emerges from the pandemic. The Organization of the Petroleum Exporting Countries has raised its forecast of global demand growth this year in its latest monthly report. World consumption is likely to average about 96.5 million barrels a day, up almost 7% from 2020. And John Driscoll from JTD Energy Services joins us now. John, what's your take on the demand and production forecasts?
Well, the OPEC monthly report for April, it was a couple of hours late coming out. It had us all worked up, but there's really not that much of a change from the March report. In terms of demand, world demand, they see it increasing by about 100,000 barrels a day. But the net figure, I mean, if we can talk in terms of round numbers, 2019 we had 100 million barrels a day of demand. 2020, with the onset of the coronavirus, that dipped to 90 million barrels a day. And OPEC foresees the recovery in 2021 hitting about 96 million barrels a day, or about a 6% increment. So clearly a somewhat optimistic but guarded forecast. It's not that big a jump. I notice that other analysts out there are a bit more bullish. They see this recent weakness last month as an opportunity to buy the dip. So I'm guardedly optimistic. I think we've neared a bottom. I'm looking forward to a summer where demand will continue to recover.
Yeah, so in a sense, this momentum is set to continue, thus boosting oil demand. What could derail that, though?
Elizabeth, we've got so many potential wild cards, known unknowns. I mean, chief among them, as we all know, is the 800-pound gorilla in the room is the coronavirus. The threat of reinfection, of unknown strains, of any hiccups in vaccinations. I mean, AstraZeneca, a few weeks ago, there were concerns raised about that. And just today, the one-shot vaccination, Johnson & Johnson, threats of blood clots. The whole regime of vaccination, if that's upset, that could affect the recovery. There's other wild cards like Iran. The conventional view is Iran would slowly come back. There would be a protracted renegotiation, but there's signs that indirect talks have occurred. But there's this debate between the Biden administration and Iran, who's got an election coming up in June. About is it all or nothing? Can they restore the Joint Comprehensive Plan of Action that was negotiated in 2015, and which President Trump pretty much canceled in 2018? Clearly, if Iran makes progress in renegotiating or reinstituting the original deal, this could release additional barrels onto the market, which could you could have a supply effect on the demand. Then the other big factor is inflation, the tsunami of stimulus, infrastructure spending, loans, stimulus payments. If we continue to see interest rates rise, this could affect economies. But I tend to think that inflation might tend to also be a positive thing for those who believe in commodities, in oil recovery. Oil is a good place to be if we're looking at potentially an inflationary environment.
All right, thanks so much, John Driscoll there from JTD Energy Services.